Well, once again, the rubbery unemployment data from the ABS delivered a surprise today, and one which is at odds with the RBA's view of expected trends. As I've highlighted before, statistical offices in several countries are having difficulty in collating accurate employment statistics, so there's always some noise in the machine. But the jobless rate has jumped to a 4-year high of 4.5%. That's a much weaker result than the 4.3% that economists were expecting. Now, this is potentially a signal of weaker labour markets, and many are now suggesting that this boosts the chance of another interest rate cut at the Reserve Bank's meeting in November, just a day after NAB mused about not having any further rate cuts until well into next year. But before its November meeting, the RBA will also, of course, get key inflation figures for the September quarter from the ABS. That's due out on October the 29th. One economist was quoted as saying, while employment levels haven't dropped yet, the labour market has clearly changed, and we can hear the creaks. The RBA may hold steady for now, but this is no blip to brush off. RBA Chief Economist Sarah Hunter and Governor Michelle Bullock have both said recently that the labour market remains near full employment and is still tight. But then the RBA did warn in the minutes of its September board meeting that employment could slow as the less labour-intensive market sector took over from the non-market sector. In other words, private sector versus public sector. In fact, last week, Governor Michelle Bullock told a parliamentary committee that Australia's economy is in, quote, a pretty good spot, with inflation inside the 2 to 3% target and the labour market still tight. And at a forum in Washington on Wednesday, the governor characterised policy settings as marginally tight at present. Significantly, though, youth unemployment rose sharply this month from 9.8% to 10.5%. HSBC chief economist Paul Bloxham said the youth unemployment rate was often a good indicator of whether the jobs market was tightening or loosening. And incidentally, we're seeing similar trends in the UK and other markets too. So unfortunately, young people are taking the worst of it.